What's going on, everybody? This is Caddy with Money Vesting. So the market's on a full tilt with Tesla down over 4%, Microsoft almost over 3%, Unity Software over 3%, PayPal down over 3%. I'll actually let everybody join. So I don't know anybody's here yet. So we'll see if anybody comes up. All right, so we have a few people. Let me know if you guys can hear me okay. You guys should be able to hear me fine. So let me know in the live chat if you guys can hear me just okay. So let's see, we've got 8 people, 12 people watching. All right, we got a few people joining in. So again, let me know in the live chat if you guys can hear me fine. So here, let me take a look. All right, what's up? There we go. So I just wanted to make sure that the live chat is working. What's up? What's up? Thank you for joining in. So let's see how many people we have. So just about 22 people. I think this still needs to update because it's not showing me the concurrent viewers. So I hope you guys can hear me okay. Just give me a thumbs up or let me know. Excuse me. Just let me know in the live chat if you guys can hear me fine. But the market's just absolute on full tilt, and this is you guys will notice it's red across the board, with only a handful of stocks actually doing well. So the markets, the S&P down a little bit over 1.5 or over 0.5%, and the Nasdaq down over 1.5%. So absolutely full tilt. This week, right over here on this screen, we've got the S&P here, we've got the Nasdaq on the right, and we've got crypto, so Bitcoin more specifically, down over 7%, trading as low as 53,300. So definitely taking a bit of a beating, and that's resulting in a broader market sell-off as well. So we're gonna go over a lot of stocks today. I'm excited, and of course this is a brutal day. This is a very severe red day, but again, this happens in the market. This is something that all of us in hindsight, if you if you ask yourself, this is something that we always wait for, right? We wait for days like these so that we can actually go out and shop and basically take advantage of these deals, right? So definitely, I didn't plan on going live today. I was almost going to be in bed very soon because it's a little bit over 10 past 20 p.m. Indian Standard Time. So you guys know that I've been streaming from India, and the markets are open till like 2:30 in the morning. But I had to go live because the markets are just absolutely crazy today. So Tesla down over 4%, trading as low as $748. The low was $735. Like, that was an incredible low price point for Tesla today. Apple down over 2%, trading as low as $127. So kind of hovering right around that support level. And this right here is going to be Palantir down over 1%, trading as low as 28.60. We've got NIO down over 5%. Absolutely insane drop, trading as low as 52. The low for the day was $51. And we're going to go over my analysis as well. So this right here is going to be, let's see, NIO's stock price, and that is going to be the support that we had talked about at close to $50. So we kind of hovered right over that lower low and the horizontal support. So we're going to go over all that as well. So very excited. Casper, I know it sucks to look at your portfolio today. I'm down a little bit over $2,000. So again, it's not a great feeling. It's definitely part of the game. It's part of investing. It's part of the markets, and something that we have to live by, right? You're not gonna have a green day every single day. There's going to be days like these where we have to take advantage of them. So I know that the portfolio you're mentioning, yes, it can really be unfortunate to look at that today, but trust me, there's a much better days coming in the future, right? This is just part of investing as it is. So let me know if you guys can hear me okay, and let's see how many people we have joining in. So we've got a little bit of 49 people. So again, make sure that you hit that like button, subscribe to the channel if you're new, and make sure that you also hit that notification bell so you don't miss out on any future videos, and you also don't miss out on any future live streams that I might be doing. So, all right, so we will be covering NIO, we'll be covering a lot of other stocks as well. So what I'll do is I'll actually grab the notepad here, so just so everybody new people joining in, they can kind of go back to that timestamp and basically go over those stocks as well if they want to get my opinion and analysis on those stocks. All right, let's start with NIO. Right here is going to be, actually, let me put the timestamp in really quickly. So we are 40, what's the time here? It's hard for me to see. All right, so NIO today down a little bit over 5%. Again, this is something that we had discussed in one of my previous videos. We were talking a little bit about the lower highs and lower lows, so this downtrending channel within which NIO's been trading, right? So the lower highs represented by this red line and the lower lows represented by this green line. NIO also have the earnings coming up. So actually, let me see if I can pull up that spreadsheet that I shared in one of my previous videos. Let's see right there. So this right here is going to be actually the complete earnings breakdown that I was able to kind of do for NIO, which is going to be very, very important for the company moving forward. So I'm going to quickly do that. Deliveries for 2018 were a little bit over 11,000. 2019 were over 20,000. 2020 we had a little bit over 43,000. And then they had a year-over-year change of 112%, right? That's from 2020 to 2019, right? 112% year-over-year change. Q4 2020, we already know how NIO did in terms of deliveries, 17,353 vehicles, up a little bit over 111%. And their own guidance was 16,500, 17,000 vehicles. So very, very substantial growth, triple-digit growth for the company, for which I'm very, very excited. And this right here is going to be the financial summary for NIO. And again, you guys are more than welcome to watch this complete analysis that I did on NIO and the earnings. They're going to be reporting next Monday. So not today, but the following Monday on March 1st. I think Li Auto reports today, and XPeng is going to be the third and the furthest out. They're going to be reporting on March 8th. So for NIO, the vehicle sales, of course, have been going up. My projections are $943 million. For vehicle sales, 15% vehicle margin, 992, just shy of $1 billion in total revenues, 13.5% in the gross margins, 134 million. Let's see, I think that's going to be gross profit. So just about a 13.5% gross profit margin. So that's going to be about $134 million in gross profit. And then I'm expecting for them to report a net loss of about $148 million, still a lot better than the previous quarters, and then about a negative 10 cents in earnings per share. So it's going to be kind of like my expectations, and this right here is going to be future fiscal year 2021 guidance. I'm expecting NIO to kind of tap into 100% of their capacity right now, so 100,000 vehicles. That's going to be a little bit just shy of 100,000 vehicles. And thank you so much, Llama, for putting in the time. I really, really do appreciate that. So thank you. 542. All right. Perfect. And then total revenues are going to be slightly under $5 billion is what we're expecting for fiscal year 2021. That's going to represent 108% growth, 107% growth respectively for vehicle deliveries and the revenues itself. And another thing that I actually kind of read on the subreddit, let me see if I can find that really quickly for you guys. So let's go over to here, and we're going to go over NIO, and this right here was what we were talking about. So this is again something that we broke down, and I want to hear your guys' thoughts as well, right? This is something that's really important for NIO moving forward, because again, it's going to be really, really critical for NIO's China's deliveries, production, and of course capacity as well. So this was on the subreddit, and this is something that we broke down in my previous videos as well, with the rumors of both plant expansions and the new research park manufacturing facility. NIO can reach 600,000 cars a year in production by 2024. So again, very, very important timeline, and 600,000 cars is going to be substantial, almost 6 times growth in deliveries of expected fiscal year 2021 deliveries. So again, very, very important news piece here for NIO. And you'll notice that the current plan can reach a run rate of about 100,000 to about 150,000 by year end of this year. That's what we have in our projections. Of course, if they surpass over 100,000, I really strongly believe that NIO's price and fundamentals are going to really, really do well, and they're going to grow at a much faster rate than what we're expecting in 2021. So, and with the expansion of NIO Jack plant, it's estimated to reach about 300,000 in production by the end of the year. In addition to this, if the news is to be believed, we should get an official confirmation during earnings. NIO's new research park will be able to produce an additional 300,000 cars a year. Going off of Tesla's Gigafactory timelines for the same size of land, it should take about 2.5 years to come online. And this means NIO can theoretically have a 600,000 year capacity in early 2024. This represents a 13.5 times multiple on production compared to this year. So again, a lot of growth ahead of this company if they're able to scale that production and if they are actually in fact in talks of having these parks and manufacturing plants in China. And this puts 100,000 over Tesla's current yearly cumulative production for all their gigafactories global sales, meaning that NIO can deliver 600,000 in China alone on better margins. So NIO, I believe out of the 3 Chinese EV companies, Li Auto has the best margins for gross margins, and then the NIO is probably in the middle, right? NIO is like, let's take a look if you have the Excel spreadsheet open. So they have the gross margins are 12.9, almost 13%. So I'm expecting 13.5%, and the vehicle margins are 15%. So I think Li Auto is slightly higher. They're in like high teens, and XPeng is like slightly in single digits right now. So we expect vehicle margins to improve substantially for NIO in the future as they scale their deliveries. So, in terms of the stock price, we're kind of getting tagged at $51. We're still kind of getting we're still trading inside this downtrending channel, so the lower highs, the lower lows. So the pattern is very, very weak. We've seen this pattern for a lot of different companies, right? Tesla's been downtrending, Apple's been downtrending, Amazon's been downtrending, Microsoft recently pulled back substantially. So a lot of pullbacks. Riot is down over 6% because Bitcoin's down over 7%. Fiverr finally taking a breather. I mean, this stock we covered on the channel, that's going to be ticker symbol FVRR, and it's been on a tear, right? It broke past 300 just last week, and now it's down over 10% in a single day. So that's another thing with a lot of stocks is like, you take staircases up and then you take elevators down, right? That's exactly what we're seeing in the markets right now, because when fear kicks in, fear, in my opinion, is a lot stronger than euphoria in the markets, right? People react to fear a lot more than they react to euphoria and fear of missing out in the market. So that, in my opinion, is something to take advantage of, in my strong opinion, because, this is all because of a broader market sell-off, right? This has nothing to do with the company's fundamentals. We already actually broke down that the company is strong, and so is Tesla, so is Amazon, so is Apple, so is Palantir, a company that I'm very, very bullish on. And there's nothing wrong with these businesses, right? Over the next 5 years, maybe 10 years down the road, in 2030, you're going to look back at NIO and you're going to look at a $52 price tag and be like, wow, why didn't I buy more, right? In my strong opinion, that's kind of like the mentality that I have. But let me know in the comment section, in the live chat, what do you guys think about this? And Jordan, we will check out Palantir as well. So stay tuned for that as well. So $50 is going to be a really, really strong support for NIO moving forward. Now, considering that we are trading below $54, so that right there is going to be this support level, and we are also breaking down below the 50 EMA. That's a little bit of a cause for concern, because that's the first time NIO stock is actually breaking down below its 50 EMA. So you can go back in the history of the chart, you'll notice that never ever since like April of 2020, NIO has not yet broken down below the 50 EMA. So that's a little bit of a cause for concern, and you guys can pretty much see that for yourself. You'll notice that we kind of bounce off of that white line here. We kind of bounce off of that 21 EMA here. We pushed up, consolidated, bounced off of that 21 EMA here, and then basically took off to new all-time highs, $58 per share. Sold off a couple of times, validated that 50 EMA here, and then pushed up. So the first time we are actually kind of trading below that 50 EMA. So that's a little bit of a pattern shift that we're seeing. Bears are starting to take control of NIO, Tesla, some of those stocks, no doubt about that. But again, there's no need to panic. This is just how the markets work. And this right here is going to be the next support level at close to $50 per share inside this downtrending channel. We kind of tagged this lower low, which is kind of surprising. I figured, if you were selling off, you would come at least down to $50. I would have picked up some more shares here. Although I did pick up some more shares for Tesla, for Amazon, for Apple. Apple retesting below 127 was absolutely insane to me. And then NIO also breaking down. I did pick up some more shares, but $50 would be kind of like the next support level to watch. And then 54, I will turn that into a resistance during our market update. I do like to turn these levels into support resistance levels to kind of change those colors after the markets close, because we don't know what's going to happen. Oftentimes we see the markets kind of drop, and then in the last hour there's going to be insane amount of buying to push us back to some stocks even going positive, right? We've seen that happen last week with Tesla basically down 2% and then only to close the day up about 30 cents, 30 basis points on the day, right? So we'll wait for the markets to close. Right now it's about 12 p.m. Eastern, and it's about 10:30 p.m. Eastern here. So we'll wait for another 4 hours for the markets to close, and then we'll kind of make those adjustments. But again, earnings coming up. I'm expecting a really blowout quarter in terms of the deliveries. We already know that's going to be reflected in the stock price, be reflected in the revenues as well. So strong company in my opinion, a lot of potential in 2021 going into 2022. $50 would be the next support level to watch. 54.50, somewhat of a resistance intraday, so keep that in mind. All the way as high as $59.33. So unless we see some type of a shift in the pattern for NIO, so let me give you guys a very simple example, right? So we are perfectly trading inside this sort of downtrending, right? So we're trading lower highs, lower lows, lower highs, lower lows, lower highs. This right here is going to be lower lows. So if next week or remainder of this week, if NIO has any type of a push higher, I would at least expect it to trade as high as $59, $60 per share. But again, I wouldn't be surprised if we continue to kind of stall right at this $50 level. But the pattern will shift once we break out of this $59, $60 per share, right? That's going to eventually shift the pattern, and bulls will start to take control. We'll start making higher highs and higher lows, and that's what we want to see for NIO moving forward. So that's very, very important. All right, so next up, we're going to talk a little bit about, so this right here, again, are going to be Tesla, top left, down about a little bit over 4%, almost 5%. We've got Apple down over 2.5%, almost, trading as low as 126. So Palantir down a little bit over 2%, trading as low as $28.40. And NIO, again, down a little bit over 5.5%. And the entire market just absolutely getting slaughtered. So let me take a look at some of the commodities. So let's take a look at, so platinum doing well, gold doing well, palladium, silver, US oil jumping over $61 a barrel. So I'm assuming energy stocks will also be doing well. So let's check out Exxon Mobil really quickly. So they're up a little bit over 4%, right? Exxon Mobil jumping, and this right here has been the uptrend for Exxon Mobil. Kind of the price is tied to the commodity and oil prices, because that basically affects their upstream business. So again, $55 or $56 is going to be the next resistance to watch for Exxon Mobil. We've been trading inside this uptrending channel, which is the complete opposite of NIO, right? NIO has been trading in a downtrending channell, making lower highs and lower lows. And this right here is the uptrending channel, making higher highs and higher lows. So let me take a look at how many people we have on the stream. So 339 people. We've got 46 likes. Let's see if we can get at least 100 likes on the live stream so that we can get this out to other people as well and get on the YouTube algorithm for recommended and homepage. So please make sure that you drop a like. I really, really do appreciate you guys' support. Also, the Patreon link is going to be down in the description below. If you guys want to join, you'll get access to my charts. So these charts will be accessible to you. You'll be able to simply just type in the ticker and take a look at my analyses and go over the support resistance levels. You'll get access to our Discord. You'll also get access to the growth portfolio, which we're absolutely, by the way, getting killed because the markets are down so much. But still, eventually, this is a long-term portfolio that I'm building. Right now, we have AMD and Tesla and Palantir in that portfolio, and I do plan on adding more shares and more stocks in that portfolio as well. So if you want to check it out, again, the link is going to be down in the description below. So Bitcoin pulling back, trading as low as 52,957. So we just broke down below 53K. Michael, thank you so much. Again, yes, thank you so much. Smash that like button. We're down a little bit, close to about 8% on the day. So definitely a very, very strong pullback. And let me just check out the VIX. So the VIX is very, very important as well because we've talked about it extensively. It's up a little bit over 4%. So, you know, and last week, if you guys didn't remember, during our daily market update, I mentioned that, you know, I would not be surprised if we do see a more severe pullback. And the reason is because we've been stalling, right? Tech and healthcare, two big sectors to watch for the markets, right? When we talk about the broader markets, if you have a really good feel for where tech and healthcare is going, you can kind of almost predict where the broader markets are going. And why? Because tech and healthcare make up majority of the S&P 500 and the Nasdaq. So let me see if I can bring that screenshots up. So that's going to be futures. This right here is going to be something that's really important for us to look at. So this right here is going to be the 1 week performance. This is last week. This is not this week. This is not the upcoming week. This is the last week performance for a lot of different stocks, right? And something that we broke down in our daily market update, you'll notice Apple was down 3%, Microsoft over 1%, right? Amazon, Facebook, Disney, Netflix right here down so much. And that's basically affecting the broader markets, right? Even though you guys will notice that financials and banks like JP Morgan was up over 6%, Wells Fargo was up over 15.5%. Then we've got energies over here. Exxon Mobil, once again, jumping, right? Now, even though Exxon Mobil, Chevron, like all these companies are doing well, they're going up, why is the markets going down? Because tech and healthcare are dragging us down. And that's one of the reasons why this chart, even though it can look green in some areas, if these big squares you guys see for Microsoft, Apple, Google, Facebook, Amazon, Tesla, if they don't do well, they're going to drag the markets with them. That's just how the S&P and the Nasdaq work. They're market cap weighted, as opposed to the Dow Jones, which is like 30 stocks that's price weighted. So it doesn't really matter what the market cap is. But the bigger the square in this sort of screenshot, so Apple, you guys will notice, is such a big square. Amazon is a big square. Tesla is a big square. So that basically represents a much bigger market cap for the S&P 500 and the Nasdaq. And then you have really, really small squares, like JP Morgan, Bank of America. Here we've got Exxon Mobil, Chevron. So even though they're green, they're not going to really affect the markets. So we always have to consider where tech and healthcare are going, right? So that's going to be really, really important for the markets. So this is going to be the year-to-date performance. So, of course, after today, Apple is going to be quite severely in the red. You put in like another 3% down for this. So we're going to be down a little bit over 5%. Amazon put in another like 3% for this stock. Tesla basically shaving off most of those gains. So it's probably going to be down like 5% after today. Microsoft also probably down 2% today. And then we're just extended on these rallies on energies, financials. Semiconductors still doing decent, so I'm not sure where Nvidia is trading. Actually, let's take a look really quickly for Nvidia. I know that AMD is down quite bad, so Nvidia is down a little bit over 1%. So again, pulling back, and AMD I think is down over 2%, which is absolutely hurting my portfolio right now. And in the short term, yes, it sucks to kind of look at that and be like, oh, you're down a little bit over 2.5%, almost 3%. But again, having a long-term perspective on the market is always going to help, and not panic selling is always going to help as well. So semiconductors, again, doing really, really poorly. Let's take a look at Intel. I know that Intel kind of outperformed the markets last week, but we are down a little bit over 2.5%, almost 3% for Intel as well. So again, very, very brutal start of the week, but Google still up year to date, a little bit over 19%. And we're up like UNH down over 7%, Disney, Netflix. We've got some other stocks like Walmart. So this right here, the whole consumer defensive space. Actually, let me bring that up with a different color so you guys can see that. So this area right here, the consumer defensive, is doing really, really poorly, right? Walmart, Costco, Coca-Cola, Pepsi, Procter & Gamble. Those stocks may be someplace that we may want to look into in the future as the economy starts to reopen back up, and we have more vaccinations, distributed on a more like a global scale. So just wanted to go over that because it's really important for us to look into those things. And this is all that I covered like in our previous market update. So you're more than welcome to watch that as well. But to give you guys an update, Tesla now down over 5%, trading as low as 741, getting rejected at that 21 EMA on the 5-minute chart. This right here is Intel. Let's go over to NIO. NIO is also down a little bit over 5.6, almost 6%. So we're almost retesting low of day. This right here, AMD, down a little bit over 2.9, almost 3%. So absolutely getting killed in AMD. And then let's take a look at our main portfolio. And this right here is going to be Nvidia, down over 1%. Amazon is also down almost 2%. And Apple is going to be down a little bit over 2.5, almost 3%. By the way, I have a really interesting surprise later this week on Thursday that I will be sharing with you guys. So keep a close eye on that as well. Danny, I completely agree with you. These are healthy pullbacks. Absolutely. I completely agree with the fact that this is very necessary in the markets and something that we can expect, right? And it's okay. Like I'm down a little bit over 2,000 now, probably even down over $3,000 on the day, right? In the red. And it sucks to have those fluctuations and those pullbacks, but it's part of investing. It's part of what we do, and it's part of why we take risks in the market, right? So, all right. So what's the timestamp? Does anybody know what timestamp we're in? Because where do I see the timestamp on this? So we got a little bit over 500 members. Again, make sure that you drop that like. Let's see if we can get over 200 likes on this video. But I'm going to actually switch over to Palantir now, and we're going to talk about Palantir. So again, if you want to check out NIO's analysis, go to timestamp 542. That's going to be where we're going to be doing Palantir. NIO, and then we're going to go over to Palantir now. So, all right. It should be on chart number 2. Let's see if you have it here. But let me know how's your guys' day going so far. I know it's pretty red, but I would love to hear from you guys and how are you guys doing? Oh, it should be over here. Yeah. It should be in this chart if I'm not mistaken. It's a bloodbath. Paul, I agree. Couldn't agree more. So Palantir getting rejected at our resistance. So let's go over to the 4-hour chart. And this right here was the kind of like the analysis. So the two levels that I want you guys to watch for Palantir are going to be $25. Thank you so much for the donation. I really, really appreciate that. I am in New Delhi, India. That's the capital of India. And I'm really glad that you enjoy the analysis and I'm really able to help provide you guys with these updates and different technical analyses. So thank you so much, Backwoods baby. So thank you for the donation. I really appreciate that. So $25 is where we picked up some, where I personally picked up on my main fund, and then $29 is where we picked up on the growth fund for Palantir. I have a lot of conviction in this stock as well. Easily $45 to $50 price target for myself in the next 12 to 24 months for this company. This sell-off due to lockup expiration, due to earnings, was a little bit of an overreaction. Let me see if you guys agree with me or if there's something that you want to add. Let me know in the live chat what you guys think about Palantir, right? What is your opinion? What is your price target for the stock? But we are down quite a bit. So from our all-time highs of over $43, $45, Palantir was down a little bit over 43%, right? That's a pretty big sell-off for a company that's literally a government contractor and is tapping into a commercial like business segment as well with their Foundry Gotham platforms, and they are potentially going to do even better in 2021 going into 2022. So strong projections for them. $29, $30 was the resistance that we had talked about. So today's high was $30.19. So we kind of got tagged at that resistance before pulling back down to 28, 22. And the support is going to stay put at $25. That's going to be the first level of support to watch for Palantir moving forward. So Anna, yes, definitely a very rough day and potentially even a rough week. This is something that we have to be prepared for. And I'll go over the S&P and the Nasdaq as well. And I wouldn't be surprised if we see another red week, or if February in general is going to be a red month, and then we pick up in March and kind of see where we go in April, May. Once the vaccinations are distributed, once the COVID cases, which are already trending down along with the death rate, and summer right around the corner, I strongly believe that the economy is going to do really well, but it's kind of hard to judge if the market's going to price that in, right? Because we've always seen this kind of a disconnect between the markets and the economy. And even though the economy was struggling with the labor market, the unemployment rate, the stock market has continued to rally, right? Maybe we'll see some type of a shift or a switch. And, even though the economy is surging, they're doing well, markets may be stalling because think about it, right? The markets are always forward looking. They're always trying to predict what's going to happen in the next 12 to 24 months. And if in the next 12 to 24 months, we've already priced in a better economy, a recovery, a strong GDP growth, a better looking labor market, so on and so forth, then the markets can potentially stall for some time. We can see some type of consolidation sideways because a lot of it could probably be priced in. It's kind of like my opinion, what I see for the market. But again, you never know, right? We could see some more growth kind of fueling this market in 2021 because we have to be cautiously optimistic about the markets in general. But for Palantir, if it comes down to $25 or anything under 25, for me is going to be a strong buy. And $22 is going to be like a really aggressive point where I will be personally even looking to basically close out of some other positions to go heavier on Palantir as well. But those are going to be two really strong support levels. And if we do see a breakout over $30 or $30.77, that right there is going to be really, really important for Palantir and some type of a trend reversal, because that's going to break out of those resistance levels and those moving averages. So again, very, very important for Palantir to do that. All right, so Palantir is done. We're going to quickly go over, let's see if I can bring up the S&P. So this right here is the chart for the S&P 500. Again, we've talked about this. Let's go over to the daily chart. A massive doji candle right above the 21 EMA. So that's what we're forming right now. A lot of indecision in the markets as to where we want to go. So, I wouldn't be surprised if you do see some more pullbacks, right? And actually, if you guys did get a chance to watch my most recent update on the markets, this right here was kind of like the complete analysis that we had shared, right? This is a pullback territory for the S&P. So if you're new to the channel, we talk a lot about the broader markets and some individual stocks and individual companies as well. So this right here is a pullback territory in my strong opinion at close to 3,800 for the S&P. And that's going to be a potential drawdown of close to about another 3% potentially for the S&P remainder of this week, which is again very normal, something that we saw during the last week of January. And then if we do see a more severe drawdown for the S&P, this right here is going to be like somewhat of a correction territory. So we've got the pullback, we've got the correction, we've got the bear market, right? The bear market happened in March. That was the shortest bear market that we saw when the S&P and the Nasdaq dropped over 20%. So I personally do not see a bear market for the S&P 500 because that would be basically coming all the way as low as 2,900, 3,000 points for the S&P, right? That's going to be a pullback of close to over 20% for the S&P. So we've got three categories here. I could see a pullback remainder of this week, maybe a correction sometime in 2021 down to 3,500. But in my opinion, nothing worse than that because in the 200 simple moving average, the daily moving average will also get aligned right here at close to 3,500 levels. The bear market is somewhat of a very less likelihood scenario for the markets in my strong opinion. But let me know in the live chat what you guys think about the S&P 500, the Nasdaq, and of course some of those individual stocks as well. So I actually went to school for finance. So I graduated with a finance degree. So again, thank you so much for the question. I really do appreciate that. I graduated with a finance degree and spent about a couple of years as an analyst working for a company. And now I'm basically doing content creation, a lot of videos on YouTube full time. And technical analysis is something that I picked up over the years and been just charting a lot of different charts, reading a lot of books and tutorials and so on and so forth to get a better feel and better understanding of different technical indicators, support resistance levels to kind of understand how the markets work and how it kind of plays into technical analysis and sort of like using it as a tool to kind of optimize those risk reward ratios and finding those key optimal entries as well. So Danny, portfolio down over 7K today. Lol, in the last 6 months, I'm up 41,000. Heavy on cash for buying opportunities this week. Completely agree. Yes, we're down as well. I'm personally down a little bit over $3,000 today. So again, it sucks. Very, very unfortunate day. So, take this as you're doing a great job. By the way, congratulations on those profits. And you're doing a great job, keeping a little bit of cash available to go heavier on those buying opportunities. So that's exactly what we're expecting from the markets, right? These pullbacks, these corrections, if they happen, they're great for the markets, right? They pull back. It's kind of counterintuitive, but that's what we have. That's how we have to look at the markets moving forward. So give you guys an update, S&P down a little bit over 0.5%, the Nasdaq down almost 2%. So again, guys, Nasdaq taking a much severe beating than the S&P 500, and we actually broke it down below this ascending support. So higher highs, higher lows. This was the uptrending channel within which we were trading, going back as far as January 29th. So if you guys were to look at this candle right here, right? This was down a little bit over 2% for the Nasdaq. We broke down below the 21 EMA, and we were kind of hovering over that 21 EMA, and we were kind of selling off pretty aggressively. And we are doing the same exact thing right now, right? We're breaking down below the 21 EMA, selling off pretty aggressively. And Sean and I went to school in New York. So I actually studied for 5 years, for 4 years actually. I spent 5 years in the US. I spent 4 years in school, 2 years in Maine, 2 years in New York, and then I worked 2 years in Boston, about a year and a half in Boston. So went there, got my undergraduate degree, and then moved to India back home with my family. So NIO we covered, Mihan. NIO we covered. Here's the timestamp. If you want to go back over to 5 minutes and 42 cents, NIO we covered. Palantir we also covered. I'm not sure exactly what that timestamp is. So if anybody knows, just let me know and I'll put that right there. And then Tesla, J, we're going to cover Tesla in just a second, but I'm just going over all these live comments really quickly. Adam, the problem is the inflation is coming. I think the government knows it and is why stimulus is coming slow. So yeah, I mean, inflation is coming. That's something we've discussed in our videos. So 2% is what the target is for long-term mean, for the long-term interest or inflation. But even then, we have to really understand, is it going to be a short-term inflation rate, or over the long term, where that number is going to be? Because of course, everything is going to get priced appropriately in the markets. The interest rates is obviously one of the things that's affecting the markets quite severely. So you'll notice that the 10-year yield. So let's take a look at some of those alternatives. So let's see if I have the 10-year yield here. So let me just add that really quickly. It's going to be 10Y. I forgot what that ticker was. Oh, there it is. So US government 10-year yield. So that's, again, very, very important. It's up, I believe. But anyway, yeah, so that was ticking up, right? It was trading as high as 1.375%. So as that starts to go up, there's a little bit of a flight to safety, a flight away from equities over the bonds, because they become a little bit more attractive with higher yields. And if inflation is also around the corner, that's going to have a negative impact on equities as well. So talking a little bit about the Nasdaq again, these are going to be some support levels, although we are breaking down below 13,700. So again, very, very brutal day. Now we're down a little bit over 1.8%. So it's like it's so much red. It's like it's one of those days where you just want the markets to close like right now. It's like immediately just close right now. Although it's not as bad as March, because we were going into like all these halts because the markets were down over 4%, 5%, 6% intraday. So that's pretty. Corey, man, I love you. Thank you so much for putting that in. So 934 or 935 is going to be Palantir, and the S&P / Nasdaq. If you guys can tell me that as well, I really do appreciate that. So 13,697, 13,700 will kind of turn into the resistance after the markets close. Right now, we're still waiting for the markets to close. We have a little bit over 3 hours for it to close. So again, we have a little bit over 700 people watching. So again, thank you so much for your guys' support. If you guys don't mind smashing that like button, it will really help out the channel. So let's see if we can get over to 300 likes. So the next support, or the next stop point for the Nasdaq, is going to be sitting roughly at 13,200. And similar to the S&P, I would not be surprised if we do see another 2.5%, almost 3% pullback remainder of the week. That's something that we need to most certainly be prepared for, right? If you go over to the weekly chart, you'll notice this past week was brutal. We were down a little bit over 1.5% for the Nasdaq, and this right here is already a drawdown of over 2%. So we're already surpassing the losses from last week. So we are weak, right? The pattern's weak. This is no surprise. Bears are in control, and we got to give it to the short sellers as well, right? This is like one time or twice a year that they get their opportunity and get their day to actually write home about. So again, it's all right. So 13,200. is going to be the support all the way as low as 12,600 points, which is going to be, in my opinion, a much stronger level of support, because that will potentially be in that correction territory like we saw for the S&P, and we would be down substantially from our all-time highs, a little bit over 10%, at which point I also expect we also expect the Federal Reserve to kind of backstop the markets somehow, because we know that 1.9 trillion is going to be pumped into the economy quite substantially, and a lot of people are going to be retiring this year. So obviously a lot of pension funds, hedge funds, a lot of social securities, Medicare, all that gets affected with the markets pulling back, because most people are investing in the S&P 500 or the Nasdaq, right? So very, very important levels to watch. I personally do not see us retesting 12,000, because that will be a quite severe drawdown of over 14%. So again, that would be more of a bear market territory, similar to the S&P 500. But we have to always consider for Nasdaq where tech and healthcare is going. That's very important for us. And tech has already been beaten down. Like if you were to look at this indices, so I've actually created sector indices, which you guys have access to. Well, I'll give you guys access to this through our Patreon. That's something that I actually need to do, so I'll make a note of it. So this right here is actually sector indices that I've created for different sectors. So this right here is going to be Facebook plus Amazon plus Google, Netflix, Microsoft, and Nvidia. And you'll notice that we are down a little bit over 1.5%, and it's market cap weighted. This index itself is trading as high as 7,006, right? That's the point level that we're trading at. And we've seen a significant rally for these stocks as well, right? This is going to be mostly like FANG plus Microsoft and Nvidia, and coming in from March lows, this is up a little bit over 106%. So substantial growth. And it's not to say that these companies are overvalued, but it's just that these companies have the fundamentals and the cash flows and the revenues to show for the valuation, right? They're growth companies, so they are expected to trade at a much higher price to sales, at a much higher PE ratio. But this right here has been a significant pullback, is what's driving the markets even lower, more specifically the Nasdaq. Now, if you look at financials, this right here is going to be financials. So it has a Bank of America, JP Morgan, Berkshire Hathaway, Goldman Sachs, Wells Fargo, and Citigroup, right? So you'll notice a complete opposite, right? We're pushing higher. The last few weeks have been absolutely incredible. Month of February, if you were to go over the monthly chart, you'll notice that this index has done really, really well, right? We've actually broken out of this previous resistance from February 2018, and it's up over 16%, trading is at 649. So absolutely incredible gains for financials as well. This right here is going to be healthcare. So healthcare, you guys will notice we've got Johnson & Johnson, Procter & Gamble, CVS, Pfizer, and UNH. Some of those healthcare companies in the S&P 500. Let's go over to the weekly. So down, right? Last 4 weeks, we're down. So if I were to kind of split this screen into two, and we've got healthcare here, and we've got tech over here, you'll be able to tell exactly what's driving the markets higher or lower. So tech over here, we've got Facebook, Amazon, Apple, Netflix, Google, Microsoft, Nvidia, and we've got healthcare over here, Johnson & Johnson, Procter & Gamble, CVS, Pfizer, UNH. So these companies are basically dragging the markets lower. These are the culprits. If you want to blame somebody for the markets being down, these are the companies. But if you were to look at financials here, and then energy over here, it's the complete opposite, right? Exxon Mobil, we've got Chevron, we've got Hess, we've got Occidental, and then this right here is going to be banks, Bank of America, JP Morgan. So it's the complete opposite. It's a complete shift for the markets to, and the reason why the markets are down is because these companies don't have enough market cap for the Nasdaq and the S&P to push it higher. So even if they can be down, even if they can be up a lot, Amazon controlling so much of the market cap, Apple controlling so much of the market cap, the broader markets pull back, right? So we really need tech and the help of healthcare to push markets back to new all-time highs. That's just a fact, and this is just how it works, right? Unless these energy financials absolutely take off, and then tech and healthcare starts stalling, that's when we could see potential retesting. Even then, we see like choppy trading sessions, right? Even then, we just see like the broader market is just going sideways. They don't really go up, because if you go over the S&P and go over the daily chart, you'll notice that last week, even though we had those sectors do well and tech and healthcare kind of pulled back drastically, so much consolidation, right? We didn't really go up. And today, when tech and healthcare is pulling back, we're down substantially. Christian, thank you so much. I really do appreciate that. And yeah, it's not looking pretty right now, but hopefully the amounts to great buying opportunities. And that's something that we've talked about on the channel. So again, this is the time to buy. This is the time to be able to, 5 years, 10 years down the road, these prices are going to look a lot like cheaper, because if you think about the broader markets, if you think about the economy, if you think about businesses in general, are industries going to grow or are they going to shrink, right? We've already seen the shrinking part last year. GDP contracted. Where are we going from here, right? Where are we potentially headed over the next 5 years, 10 years? And there's going to be specific sectors that are going to grow much faster than the others. So it's very important for us to keep a close eye at that as well. So actually, let me see. So we got a little bit over 779 people, 306 likes. So again, thank you so much for your guys' support. I really appreciate each and every one of you guys. So, all right, we are going to go over Tesla now. So TSLA. And again, if you guys know the timestamp, please let me know. I will put that over here for the S&P and Tesla as well. So, and if you guys want access to the Patreon, again, the link is going to be down in the description below. You'll get access to these charts just as it is. They will automatically sync every time I make those changes. So Trading as low as 735. So today we were kind of hovering over 750 for a little while before breaking down severely. So 756, let's take a look. So lower highs, lower lows, similar to the pattern for NIO is what we are seeing for Tesla as well. We are consistently trading in this downtrending channel, making lower highs, lower lows, trading below those two moving averages. Actually, let me go ahead and remove those just so we have a good understanding of the price action. And let me clean this chart up a little bit. So, yep, 775 was somewhat of a support here. So you'll notice a lot of consolidation in between 775 and 800 all week last week. Tesla was kind of fighting those two levels, right? Are we going to break down? Are we going to break out? That was like the key decision point for Tesla. If you go over to the daily chart, you'll notice that we were 3 days trading in between that range, right? 1, 2, 3. This is February 19th, February 18th, and February 17th. We're just trading in between that range before gapping down quite severely, touching our lower lows. Now, the next price point is 700, right? That's what we have talked about in my previous videos. $700 is going to be a really, really strong level of support and an area of demand for Tesla stock for us to watch. Again, previous resistance, we kind of got rejected, sold off, and then had a breakout over that level. In my opinion, a very, very strong level, kind of aligned with this lower lows. So it's going to be this green line you guys see on the chart is going to be very, very important for Tesla. OP, thank you so much. I really do appreciate that. Thank you for joining in, and glad all these videos are helpful. I'm here to provide you guys with as much value and information as possible on the markets. We look at the broader markets, we look at different sectors, we look at different stocks. So if that's something you're interested in, definitely make sure that you subscribe if you're newer to the channel. So moving forward, there's been a lot of weakness, and this will persist. This will persist. I remember, when we went over the daily chart, the first time when Tesla broke down below the 21 EMA was the cause of concern for myself. So if I were to kind of remove all these lines, you'll notice that Tesla actually broke down, and this is going back as far as February 10th. It broke down below the 21 EMA, not something that it's done in a very long time, similar to NIO. And that's exactly why I'm a little bit concerned about NIO as well, only because it's trading below the 50 EMA, something that the pattern has not yet done in a very long time. And that just really shows a lot of weakness from a price action standpoint. That just means that bears are starting to take control, and it takes a long time to change those patterns. It takes some, I shouldn't say a long time, but it takes some time to actually regain control and shift those patterns, because right now there's a lot of weakness, and for us to shift this pattern, it's going to take some time, because the RSI is trending lower, the MACD is aggressively pulling back. Tesla needs to find a support first. That's the first thing that we need to watch, is Tesla needs to find a support. Right now, we're just straight up down. So in any pattern that we may see that's coming down aggressively, you'll see a huge sell-off, right? Actually, let me go ahead and bring this chart over here. So with any pattern that you may, oh my God, I have an analysis on this too. All right, so let me just go ahead and delete it. So in any pattern that you may see, right, for that's aggressively selling off, you'll notice that it would come down aggressively, then consolidate sideways, kind of like the selling pressure, it's getting exhausted, right? There's not as much selling as it was over here. So it gets kind of consolidates, find a support. So that right there is going to be a strong level of support for that stock at that level. And then eventually when we see some more bullish sentiment, bullish crossover, the RSI is very, very overblown to the oversold side. The pattern consolidates for a few days. We have a positive catalyst. The broader markets push up. Then we can see a potential reversal for that stock to continue to push higher. And then we can see some higher highs and higher lows for that stock in the future. But right now, a lot of the stocks, unfortunately, and that's something that I have to kind of put out there, because that's what I'm seeing in the markets, right? It's not, I won't be telling you guys that, oh, it's just today and tomorrow it's going to be a green day. Unfortunately, this could persist for some time, right? We could see even this week being red for the broader markets and for Tesla in general, which is good because you can go out there and shop again. You can buy more shares if you want to, right, for the long term. So 695, 700 is kind of like my target short term for Tesla, is what we could potentially see. I mean, we were almost as low as 735. So that right there would be the lower lows for Tesla. And then eventually, once it starts consolidating there, so very well, it could be somewhat of a pattern. So we sell off down to this lower low, lower highs, all the way down here to lower lows. We maybe have a minor push higher, maybe a retest of 775, could be a dead cat bounce in a downtrending channel, and then make our way down to 700, 695, potentially retest 780, 775. And once we break out of this resistance, that's when Tesla is going to start making these higher highs and higher lows, and then we can potentially make our way back up to new all-time highs, right? That's kind of like the pattern that I have had in mind for Tesla, because there's weakness, the R side trading lower. So keep that in mind. 695, 700 would be a level where I would personally be aggressively buying more. For the long term, I plan to hold this stock at least for the next 10 years because till 2030, we know that EV market is going to grow enormously to over $5 trillion. ENPH, we will go over that heavier. Thank you so much for that recommendation. That's a great suggestion. It's something that we covered in our Patreon as well. I put out an analysis on that stock as well. So for Tesla, again, this is a long-term hold for myself, and so is NIO, so is Palantir. Palantir more if it hits my target. I'll consider like trimming a little bit of my position. But Apple, Amazon, Tesla, NIO are some of those stocks that I'm planning on holding for a really long time. So let's go over to Amazon really quickly. And again, if you guys have the timestamps for S&P, Tesla, I would really, really appreciate that. So Amazon absolutely selling off once again. Amazon has been really, really weak. To be honest, it's been so weak. Earnings did not help. The broader markets did not help. It was underperforming the broader markets, which was surprising. But still, I mean, we're down to 3190, 3200 levels, and we're still kind of tagging this higher low. I'm not really sure if that's going to get validated, only because we actually broke out of the symmetrical triangle, and now we're on our way back, right? This is just something of a previous pattern, previous trend. I'm not sure if that's going to get validated today. So the next support, the next low for Amazon is going to be 3080, 3090 levels, right? That's going to be this support level right here. Previous support several times got validated here before pushing higher. So let me know if there's any other stocks you guys want me to look into. I know the CCIV is probably doing better today. Let's take a look. I don't think I have CCIV here. Let me just add that really quickly. Yep, so up a little bit over 14.9, almost 15%. Absolutely rallying. So let's see how many people we have. So we got a little bit over 800 people. Again, thank you so much for joining in. Let's see if we can get over 400 likes. I really do appreciate you guys' support a lot. Square's down over 1%. And let's see where PayPal is. PayPal is also down. Wow, PayPal is down quite a lot. Yeah, I'm not sure why PayPal is down more than Square. AMD down now over 3%, definitely pulling back. And my short-term price target for AMD was like $81. If it comes down to that low, I'll be aggressively buying more shares. But definitely a very, very red day. Palantir, we just covered. Palantir, we covered. Let's see what the timestamp is. So if you want to go over to 9 minutes and 35 seconds, you'll be able to see my analysis on Palantir, and then you can jump over to the live stream. But Amazon, I mean, strong earnings, strong everything. And if you were to kind of look at some of those analyst estimates as well, let me just pull that up really quickly. So Amazon's price target from 43 analysts on Wall Street is crazy. And I just don't get why Amazon doesn't get the love and appreciation that it deserves. I mean, it's trading at 3 times, 4 times sales, and that's 2020 sales, not to mention forward 2021 sales, right? So 46 analysts have a 12-month price target on Amazon. The low estimate is 3420. The low estimate is 3,420. Represents a 7% upside. High estimate, or the median estimate, 4,000. High estimate, $5,200 for Amazon, and it still underperforms. I just, it's one of those stocks where you have to be really, really, really patient with it, because over the long term, it's poised to do really well. 3250 we broke down. 3350 we're just struggling to break out of. Corey, thank you so much. You're the man. S&P, we've got 2348. All right. Thank you. So, I mean, the next stop could be 3090, 3080 levels. That's going to be now aligned with the daily 200 simple moving average. Really, really important moving average for Amazon, similar to Apple, similar to Tesla. That's a moving average that Amazon hasn't broken down below since the pandemic, right? So if we do break down below that, then it's going to be a really cause for concern. So let me go ahead and kind of delete these analyses really quickly just so we make the chart a bit more clearer. So again, it's been a lot of consolidation, a lot of symmetrical triangles, lower highs, higher lows. And then the 200 simple moving average right now 3062, kind of getting aligned with that 3090 support, is going to be the next stop point for Amazon for us to watch. But if it does break down below this, then it's going to be a real cause for concern for Amazon moving forward. Then it'll be a really significant shift for Amazon. Amazon spends money like a drunk sailor. Why would you say that? Their AWS growth is what we really need to look forward to. There's been a lot of debate with Azure and AWS and how that compares with each other. But yeah, for Amazon, there's going to be some time until we see some upwards pressure, and I'm really not sure why they don't do a split. They'll be so much better off doing a split, making more accessible to the retail audience, similar to what we saw for Apple and Tesla. But Amazon being Amazon, I think the last time they did a split was like 1990s or something, late 1990s probably. But since then they haven't really done a split, right? So that's going to be the support at 3090, 3085 levels. The RSI again trending lower. The MACD aggressively selling off. 3250, the next resistance. 3350, probably the most important resistance is going to be sitting right there, because we've just been struggling to stay above $3,000, 3,300, excuse me. So that is going to be a really, really important level that Amazon needs to break out of. So giving you guys an update on the markets now. Nasdaq is down over 1.6. S&P down only 40 basis points. The Nasdaq taking a much severe beating, almost like 3 times, is it? Yep, so almost 3 times down as the S&P 500 because of what we covered earlier. Tech and healthcare pulling back more severely than financials and energy. So Corey, have a great day. Thank you for joining in, and I hope you do have a great day and potentially even a green day, because a lot of us are, at least myself, losing a lot of money here today. So Nano Dimension closed direct offering. I've heard that they do a lot of offerings, Nano Dimensions. But anyway, so again, if you guys know what the timestamp is going to be for these, Tesla and Amazon, please let me know. I'll put that right here. So far, we've covered NIO, we've covered Palantir, we've covered the S&P, we've covered the Nasdaq, and in between somewhere, we've also covered like those sector indices. So charts like these, going over different sectors, how they're performing relative to the markets. Right. Cody, thank you again. So much in red. Literally all stocks will check again on Friday and Monday. Hope to see the stock in the green. Yeah, makes 2 of us. I'm down a lot, and I'm really not even checking my portfolio today. But it is what it is. It's part of the game. It's what we do. It's why we take risks. It's why we invest for the future. And this is normal. We saw that back in March. We saw that happen time and time again. And actually, I did put out a video. Let me see if I can actually find this, because that was really interesting. Let me see if I can stock market timing game. So this was actually one of the, let me see if this is the exact game that I covered in one of my videos. Yes, it was. So this is perfect. So this was one of the videos that I covered in one of my previous videos. We basically went over how many times, or the whole goal for me to cover that was, whether we should invest when markets are hitting new all-time highs. And this is actually a really interesting data point. So what this chart shows you is the amount of times the S&P 500 has been away from its all-time highs. So if I were to kind of uncheck these right here, it basically shows that only 17% of the times, so there's absolutely been 17,000 days. So this right here, 17,000 plus days for the markets that have been trading, right, for the S&P 500. And you'll notice that just about 17% of the times, the markets have been 20% or more away from the all-time highs. This happened right here, going back as far as 1958. This happened in 1962. This happened in 1966. This right here is 1970s. This right here is 1975, 1978, 1982. This right here was the dot-com bubble. Even going back as far as 1988, this right here, the Great Recession during 2008, 2009. And this was, you guys see the red blip over here is the March global pandemic because of the crash related to the global pandemic, right? Because of COVID. So only 17% of the times. And that equates to about 3,028 days that the S&P 500 has been below the all-time highs by more than 20%. Now, if you were to look at within 20%, that's been 19%. But the most interesting data point to look at is going to be within 5%, within 1%, and within 10%. And if you were to kind of add 20%, 27%, and 16%, let's see, what is that? That's, I think, 69 or 70%. So in the last 70 years that this data goes back as far as 1950, 69 or almost 70% of the times, the S&P 500 has been within 10% of all-time highs. So that was one of the videos that I covered, and the whole idea was whether you should be investing near all-time highs. And we also covered like a psychological paradigm where, you know, where we think that if you invest near all-time highs, you know, the market's going to take a drop the next day and we're going to be down and we're never going to recover. But this just goes over the last 70 years, and this goes over 2 world wars, goes over epidemics, pandemics, goes over global recessions, you know, housing bubbles, dot-com bubbles, so many different things, and the market's just been on a consistent tear to new all-time highs time and time again. So the whole idea is, and it's actually pretty good, you guys can go to this engagingdata.com and check it out for yourself. So 69, 70%, we've just been within 10% of all-time highs, and only about 17% of the times the markets have been down a little bit over 20%. So the point is that if you're waiting to get into the market when the markets are down over 20%, chances are, statistically and probability standpoint, that you'll be waiting for a really long time for us to see another 20%, 25% drop. Which is why when I was covering my S&P 500 analysis for the S&P, like going over some of those territories, I basically mentioned that I personally do not see like a 20% pullback. It's because the probability is so low, considering that there's nothing that's blindsiding the markets right now, right? There's a lot of things that we know, and there's a lot of certainty in the markets, except for like inflation, interest rates, and those things can be predicted to some extent. So that's kind of like my take on the S&P 500, and I wanted to go over that chart. That's a little bit interesting for us to look at. So let's see how many people we have. We've got 866 people. Again, 432 likes. Again, thank you so much for your guys' support. For people who are joining in right now, we've covered a lot of stocks. We've covered NIO, we've covered Palantir, S&P 500. These are going to be the timestamps that you guys can go to, refer to those stocks analyses, and then kind of jump over to the live stream. Tesla and Amazon we've also covered. I'm not really sure what that timestamp is. So if you guys know, let me know in the live chat. And again, make sure that you drop a like. Really helps out with the channel. Also subscribe if you're new. Hit that notification bell. The Patreon link is also going to be down in the description below. So the S&P pulling back, so it's pushing higher. This is going to be the 5-minute chart for the S&P. This right here is going to be the QQQs. We are pushing higher a little bit. The intraday resistance it needs to break out of is going to be this level right here. So let me take a look. This level, like somewhat 325.61. That's going to be the resistance it needs to break out of, kind of aligned with that middle VWAP. And the resistance from like 1135, so about a little bit over 1.5 hours ago, we kind of retested that level, and then we sold off down to the support, down about 0.5%, and there's a really strong support for the Qs over here at 323.80. So the low for the day, 323.80, so that's going to be a double top support or double top bottom for the Qs. Bounce off of that here at 11 a.m. This right here, so much consolidation, and this again is 5-minute candles. So we're looking at 1, 2, 3, 4, so 20 minutes worth of data where the Qs basically were kind of consolidating here before pushing higher. So all right, let's go over to some of the stocks once again. I'm very excited. I hope you guys are too. The markets are pulling back again, but this is very normal. So let's go over to Fiverr, ticker symbol FVRR, and please, if you guys can just tell me what timestamps these are, it will greatly help out the live stream and other people that are joining in so that they can refer back to these times and kind of go over. So let me know, please, what the timestamp is going to be, so I can put them over here so that people can refer to that. So Fiverr has been on an absolute rally, right? It's been absolutely pushing higher. Um, it's down a little bit over 8%. So that's, again, quite normal. Actually, did we break down the earnings? Let me see if they actually, oh, you know what? I didn't break down the earnings. Let me go over to how they reported. So, all right. I'll issue strong guidance. So that's actually good. So let's take a look. Interesting. They don't have that here. Let's just go over to their investor relations. So they were reporting for, actually they're not. So what they were reporting very soon, right? So February 18th, right? So there it is, press release. All right, so let's take a look at this. Strong finish to the 2020 year. We concluded a phenomenal year with the accelerating growth in Q4. Revenue grew 89% year over year. So that's absolutely staggering growth. And this is something that we have discussed, right? The freelance, the gig economy is going to be absolutely be booming over the next 10 years with this work from home trend, because a lot of the companies, they actually prefer to hire contractors, hire freelancers to actually do most of the jobs these days, because because they don't have to pay all these benefits and all these salaries and wages to their employees. So actually it saves a lot of money. And since people can do the work remotely, they also don't need to be in the office. That saves a lot of money, a lot of space, and a lot of healthcare benefits, a lot of cost savings for companies. So this right here is a huge gig play, or like freelancing play for the future. So reach 500 plus categories. Fiverr added 30 new categories in Q4. It now offers digital services in more than 500 categories. Let's take a look at the revenues. So revenues in the fourth quarter 2020 was 59.9 million, increase of 89% year over year. Active buyers as of December grew to 3.4 million compared to 2.4 million in 2019, increase of 45% year over year. Spend per buyer is going to be really important. So you know how we look at average revenue per user in some of those other tech companies like Facebook and Pinterest? For Fiverr, spend per buyer is going to be really important, because when you look at spend per buyer, Fiverr actually takes a small amount or small fees off of how much people are spending. So the more they spend per user, or per buyer in this case, the more money Fiverr is going to eventually make. So it's really important. So they reached like $205 compared to about $170 in year and a 20% year over year increase. So that's actually really good, meaning that people who are using Fiverr want to spend more money with the company, and they're actually pleased with the services that they're getting. So take rate is the take rate, I believe, what people get, what the people that are freelancers and offering those services get as the take rate was up to 27%, up from 26.7%, increase of 40 basis points. GAAP gross margins was 82.6. Like, think about this. If any company generates $100, right, and they're making $82.6 or $80, over $80 in gross margins, that is absolutely staggering gross margins. That's why I love like software as a service companies, and more specifically companies like Fiverr, because they have so much gross margins to play around with, right? Then they can basically control a lot of their adjustable expenses like marketing expense or research and development, so on and so forth, and have a much better EPS, much better net income in the future. But that's up from 79.3%, so definitely a very strong growth there. Net loss was still down 8.1 million for fourth quarter, about 23 cents net loss compared to 7.4 million. So right about there, right about the same, or actually it went up a little bit. So we may want to look into what the company was actually spending money on that caused them to be in net losses. But this right here is going to be for the full year. 2020 revenue, 189 million, an increase of 77% year over year. And they're trading at roughly about a 10 billion market cap. So that's like 100 times sales. Yeah, probably. Price of sales is going to be roughly 60. Because the market cap is at 11 billion and they are generating 150, right? Okay, so it's not 100, it's about 150, 189 million. Okay, so like a little bit about 60 times sales is what they're trading at. That's fiscal year 2020. So for the full year, 82.5%. Net losses for the full year, 14.8 million, and EPS loss came in at about $1.67 per share. I'm not sure if they have the balance sheet available. Oh, maybe they do. Yep. So assets sitting at 268 million. Yep. So 268 million. Total current assets 591. Total current liabilities. Let's take a look. Yep, so total assets 861, and then total current liabilities are sitting at 145. So when you take 591 over 145, that's a really healthy current ratio over 4.5. So again, strong company fundamentally speaking, and growth. There's a lot of growth, but it's really richly traded, but at a much higher valuation because there's a lot of growth that's already priced in. And Fiverr has been on an astronomical rally, like coming in from pandemic lows. If you were able to go back to April 2020. This was probably one of the plays that you would have probably looked into if you knew about Fiverr, right? It was up over 1,400%, like absolutely crazy returns. And we kind of blew the top off. And our buy points were below $200, so we kind of retested those levels coming in as far as January 27th. We kind of retested lows of $196, $200 per share. This right here has been absolutely 67% gain in the last month, maybe month and a half, and we're right now on our way back down. So if we do break down below this 21 EMA, so that's going to be this white line, the next support to watch is going to be sitting roughly over here at close to $229, $230. That's kind of aligned with this ascending support and this previous horizontal resistance, potentially acting as a new support as well, right? So that's going to be very, very important for Fiverr moving forward. The other side, the MACD, were incredibly overbought when we were hitting as high as 334. I actually did not even believe that Fiverr just kept going up. Even today, it was hitting as high as 304. It was green. But with the broader markets, it's now down, pulling back as well. So, all right. So for Fiverr, $229, $230 would be the first level of support if you do come down to that low, which in my opinion, there's a high possibility that we do considering the broader market. But 21 EMA is also going to be somewhat of a support, and the resistance is obviously going to be sitting near all-time highs at 335 levels for Fiverr. So again, if you guys could just tell me what timestamps these are, I would really greatly appreciate that. Tesla at 23. Thank you so much, Merlin. You are the man. Thank you. And then Amazon and Fiverr also let me know. So let's see how many people we have watching. So we got 700 people. Again, thank you so much for your guys' support. If you guys don't mind hitting that like button, I would greatly appreciate that. Jose, what app is that one? Which app are you talking about? Is it this TradingView platform, or are you talking about something else? Mike, AMD is a fabulous semi company. Don't we need to concentrate on semi industry, which has foundry when shortage of chips? Yeah, I mean, global chip shortage is actually going to help these companies over the long term because there's going to be substantial amount of demand. And even in the semiconductor in general, I mean, if you think about everything, like from cars to phones to TVs to something as little as a pen, there's things that are used that require those chips, those semiconductors. So if there's a global shortage, and if there's only 3 to 4 players that are offering those semiconductors and chips on a more macro level, like on a global scale, then why wouldn't AMD do well, right? They have guided us for 13, maybe 14 million in revenues in 2021. I easily see them surpassing their revenue, right? So yes, the pattern's really, really weak. Yes, it's been selling off quite a bit, but that only represents a really strong buying opportunity in my opinion because I have a high conviction on this stock. I mean, it's trading as low as $86. The market cap is at 105 billion. And the revenues have been on a consistent increase, like coming in from 2017 when they were just doing 5 billion to now just shy of 10 billion, and they're projecting us for well over 14 billion in 2021. And they are incredibly, their margins, look at their margins. This is what's surprising to me that's going really underappreciated is they're doing 45, maybe 50% margins for net income. This is not even gross margins. This is net income margin. So that's substantial, 1.7 billion off of 3 point. That's almost 50%. That's a little bit over 50% margins in the most recent quarter. And, the balance sheet looks strong, 9 billion in total assets, 3 billion total liabilities. We've got cash sitting roughly 2.29 and debt is basically non-existent debt. and Lisa Su is like completely turned the company around. And in my strong opinion, this is a huge discrepancy like in the stock price and how much the company is worth and what the potential is in the future. And you know, I could be wrong. I could be completely wrong 100%. And then if I'm wrong, I would deserve losing money on this trade. And that's just something that I would have to eventually accept. But I have a high conviction on this stock, and I personally do see it, you know, hitting as high as $100, maybe $120 a share in the future. And there's a lot of potential global shortage that's going to be more reflected in the second half of 2021. So maybe that's why we're seeing a lot of weakness for AMD, because right now, even though there's a lot of demand, their demand is surpassing their supply. They really can't do anything about that demand because there's a shortage. So, you know, it's kind of like a good problem to have for the company. Like if you're going to run a company and if you're going to have a problem, that's probably one of the best problems you could have, is that your demand is so high that you don't have time or the money or the effort to keep up with it, right? That means your product or your service is absolutely really, really good, that your demand is just surpassing everything, right? That's a good problem to have, but also you have to keep up with it. And maybe that's why we're seeing a lot of weakness for the stock in the short term, but over the long term, again, strong fundamentals, right? And for a semiconductor industry company, right? If you were to look at Nvidia, Nvidia is trading like 3 times the size, at 366 billion, and if you were to look at the revenues, they're somewhat the same. So they're trading at a much higher price to sales ratio, and the balance sheet is also strong for Nvidia as well. So another company that we are really bullish on, but again, they've got a debt of over 7.6 billion, right? Cash is sitting at 10 billion, so not as good ratio as AMD. And if you were to look at their income statement, the margins are also really, really small, which is surprising to me because Nvidia is like trading at 366 billion. AMD, that has a lot of growth ahead of it. Nvidia, I feel like it's kind of all the growth, most of the growth is kind of priced in, but AMD has a lot of growth and their margins are substantially higher, and they're also going to increase that 2 percentage points in 2021. So very, very excited about that. I'm just really curious to know why AMD is selling off, where the weakness is coming from. But again, I could be wrong on that trade, and if I'm wrong, I would deserve to lose money. But if I'm not wrong, then we could see a lot of upside for AMD, you know, as high as $95 to $100 per share. ENPH, we're going to cover that moving forward heavier. Thank you for the great suggestion. And then we will move over to Alibaba. But again, I request you guys to just let me know, you know, what those timestamps are going to be, so I can just put that over here. So anybody new joining to the live stream can basically go over to that time and can then jump over to the live stream as well. So again, thank you so much for your guys' support. Let's see where we are. 665 people. Again, thank you so much for your support and joining in. So ENPH is going to be this right here. Enphase Energy down substantially to over 169, so breaking down below that support, and we are down, wow, over 10%. It's a pretty severe pullback. And this right here are going to be the Qs. Again, we are down a little bit over 1.8%. We are somewhat getting rejected at that resistance. This right here is going to be the S&P 500. S&P is doing well. So again, we are making high of day. So that's strength. That's doing well. And we're down only about 36 basis points. So a lot of discrepancy there between the markets. So you'll notice S&P down only 36 basis points, where the Nasdaq is taking a beating, down over 1.59, 1.6%. So going over to ENPH, we are breaking down some trends. Yep, so this is going to persist for some time. Breaking down below 175 is critical for Enphase moving forward, right? That's been the support for a really long time. And this is a pretty severe sell-off for Enphase. But this right here is kind of like my analysis on the company. So let me pull that up really quickly. So this is something that I posted on our Patreon. So again, if you guys want to get access to that, the link is going to be down in the description below. You're more than welcome to join. You'll get access to my TradingView charts. You'll get access to our Discord, and you'll get access to kind of where I will be posting a little bit of like fundamental analysis, some technical analysis on different stocks, you know, some other like plays out there that we may be looking into. I'll be doing like some polls on different sectors that we may want to look into. So we know that Enphase is kind of like in that solar energy, solar panels sector. Fundamental analysis standpoint, these right here are consistently growing revenues. So from 357 million to well over 771 million is what they did in 2021. And in 2020 and in 2021, we're expecting them to generate well over $1.1 billion, right? So that's going to be incredibly important for the company. And that's going to basically represent a 40% growth in top line revenues. Gross margins are also really good, 30%, 18%, 20%, 30%, 35%, and then 44%. That's jumping much, much higher in fiscal year 2020, right? So operating income, interest expense, like all these things, these are all kind of projections for fiscal year 2021. So again, make sure that you kind of consider that as well. These are not accurate actuals. But in terms of net income, let's see, what are we forecasting for 2021? So 232 million, that would be a $1.77 EPS for the company in the future, and currently trading at 189. So as of this report, so this was actually posted yesterday, at $189, they were trading at 33 times sales and 199 times PE ratio, which I actually mentioned that is a little bit rich for a company like ENPH, right? So here, let me zoom out a little bit. So you'll notice that we basically said that 31 times price to sales ratio, which is on the high end, but I'm forecasting and the company keep in line with fiscal year 2021, which would be reflected in the stock price while the revenues grow by an expected 40%. The 12-month trailing price to earnings ratio would suggest that the company may be overvalued. So I basically put this report out just like, as a company that has a lot of growth potential, but not at these valuations. Or not at these price points. So, this suggests that the company may be overvalued, with investors willing to pay $199 for every $1 of future earnings. Current PE ratio 199, based on fiscal year 2020 EPS of 95 cents per share. But if you look at the forward PE, 2021, an expected EPS of $1.77 and the current price of $1.89, which is as of yesterday, as of Friday's close, Enphase is trading at 107 times. I forgot to mention 107 times is what? I think it's PE ratio, which is still high, but quite reasonable considering Enphase has a lot of growth potential in the next 10 years. So again, please note that these are all growth projections based on my own analysis. So again, a little bit overvalued it was, but now it's coming down quite a bit. Market cap is at 21 billion. I think it shaved off like $4 billion in market cap just today. So definitely very, very severe pullback of over 10% for Enphase. But the whole market's red, right? The whole market's down. Tesla down over 5%. Lemonade breaking down below that 140 support now, down over 5.7%. NIO almost 5.5%. So quite a severe red day. AMD now down over 3%. Palantir over 3%. Microsoft over 2%. Apple, Amazon, pretty much red across the board. And then let's look at some of the EVs. So CCIV is doing well. Hyliion is doing well. Switchback pushing higher after the huge sell-off that we saw in prior weeks. Nikola, guys. Nikola is outperforming the markets today. It's up over 42 basis points. I cannot believe Nikola's outperforming the markets. Workhorse, Lee, and Ride, Lordstown Motors, Xpeng, Tesla, NIO, we're all in the red. And kind of like the whole idea was that a lot of people were kind of shifting money or rotating out of some of these EV plays into CCIV because there was a lot of rumors. I mean, lot of rumors for their merger with potential Lucid Motors, right? So definitely EVs, kind of like mixed bag over there, with some companies doing well, some doing really bad. Let's look at some of the other ones. Let's look at some of the growth ones that I recently created a watch list. So again, red across the board. We've got CRISPR Therapeutics up over 6%. Lovesac is another company that I've been watching very closely. Pubmatic is another one that we have looked into. Support is going to be sitting at close to $40. Let's see if we got... So yeah, $45 is kind of like the support for Pubmatic. They're in like the digital advertising space. RH in the green, but then we have Walgreens. Yeah, then we have Mara, Riot, one of the big losers because of cryptos. Fiverr, we covered that. Plug Power, we've got NNDM, Bionanogenomics, APPS, all in the red. Etsy down over 4%, AI down over 4%, Roku down over almost 4%. So, and Ping and Okta, they're going to be more like an identity cybersecurity space, and they're down 3% each. Dropbox down. So, it's a lot of it is getting because of the broad markets, right? It's not the fault of these individual companies. It's not like a huge catalyst coming in. Hyliion is up over 4%. Yes, Hyliion is up for 4%. Noel, love NIO, but this might go on. I agree. This could be persistent for a little while. This could be persistent for some time, and we could see some more pullbacks for the broader markets as well. So let me take a look at how many people we have. 657. So I'm probably gonna do this for like another maybe 5 to 10 minutes, and then probably gonna go to bed. It's at 11:45 p.m., almost midnight here, and then I'll put out the market update later after the markets close, right? So I'll do that right after the markets close. But let's go over to Alibaba. So these are stocks that we have already covered, along with a lot of different analyses, talking a little bit about the stock market highs, all-time highs, different sector indices. So again, you're more than welcome to watch that and get an update on those, and then jump over to the live stream. So Alibaba definitely pulling back. It's kind of following the trend with the broader market, but the support level to watch will be at 253 moving forward for Alibaba. So right at that level, kind of aligned with that 200 simple moving average, and we'll see if the selling pressure kind of gets exhausted at that level, or if you do break down below this level, right? Then some of the support levels would be 246, 240, $230. Those three will be really, really important for Alibaba moving forward. But I personally do see a lot of consolidation in between this range, right? So 273, $253. Those are going to be the two levels to watch for Alibaba stock, right? So that's kind of like the rejection here. We got retested that resistance, sold off down to the support, and right now we are consolidating right above that 200 simple moving average. The RSI of the MACD again becoming incredibly oversold. So if I were to kind of extend this over here, we are kind of tagging that 30, 31 levels, and the MACD has also been aggressively selling off as well. So keep that in mind. Again, this is the case for a lot of stocks out there, and this could persist. There's a lot of weakness in the markets right now. And with the interest rates going up, the 10-year yield rather, not the interest rates, but the 10-year yield going up, inflation right around the corner, that can really, really be affected. That can really get priced into the markets and negatively impact the markets as well. So something to consider moving forward. So S&P is continuing its push higher, but the Nasdaq is still struggling, and cryptos are struggling. So this right here is going to be Bitcoin down over 9% now, and the S&P is still pushing higher, making high of day. I mean, it'll be really surprising if the S&P turns green and the Nasdaq and the Dow Jones are in the red, and Nasdaq being down so much, right? That's going to be very, very interesting. All right, so all right, guys, I'm gonna actually end the live stream here. I'm gonna go to bed. I gotta wake up in 4 hours and do the daily market updates. Put that out for you guys, where we cover 10 stocks. So make sure that you watch that as well. Make sure that you subscribe, hit that like button, hit that notification bell so you don't miss out on any future market updates. And of course, every time I go live, you don't miss out on that as well. I really do appreciate you guys' support. So we had a pretty good amount of people watching today. So right now we have about 655 people. Again, thank you so much for spending the time with me. Thank you so much for joining in. Really, it means a lot for you guys to spend maybe 30 minutes, an hour with me on the markets. Again, this is nothing new. This has happened time and time again. And, take that as a really solid buying opportunity. Go shopping, find some really good deals. Find stocks that you've really wanted to get into. Like for myself, there's been stocks that I was like, man, I want to get into this so badly, but it's so high. Like, now are the days. Today are the days where you could take that as a really good opportunity to kind of get in on those plays and, ride them for the next, whatever your projections are for the next 12 months, 24 months, for the next 5 to 10 years, because this is like a blip in like the grand scheme of things, right? That's something that we look at on the broader scale. So again, thank you so much for joining in. Thanks. So I really, really do appreciate each and every one of you guys. I'm really grateful for the support. Thursday, we've got something really special coming up. So keep that in mind. And again, hit that notification bell for that updates as well. So I hope you guys have a great day and a great week ahead. I'll probably do another live stream maybe tomorrow or sometime later this week. So again, thank you so much for your guys' time. I'll see you guys in the next video.